Did you know that over 30% of homeowners who use equity release end up regretting their decision? That's right. A major financial choice that seems like a solution at first can turn into a nightmare later on. In today's video, we'll be exploring one of the most important questions you can ask about equity release. When should you absolutely not use it? We're going to pull back the curtain on some of the biggest dangers lurking in this financial strategy and make sure you don't walk into a trap that could cost you more than just your home. Let's dive right in. Equity release can seem like a quick fix to financial problems, but it's not a one-size-fits-all solution. There are specific scenarios where it can be downright harmful, especially if you're not careful. So, when should you absolutely avoid it? Let's break it down. First, if you're planning to pass your home down to your family, equity release is not the right move. This strategy reduces the value of your estate significantly. If you want to leave a legacy, using equity release can mean that your children or loved ones will inherit far less than you might have hoped. Imagine this. Let's say you've worked your whole life to pay off your home, and now, because of an equity release loan, the value of the home has decreased. Your children might inherit a property that's not only less valuable, but also saddled with debt. This is a scenario we see far too often, and it's not one anyone should have to experience. Now let's talk about long-term care needs. If you're getting older and planning to rely on savings for future care, equity release might not be your best bet. Why? Because it ties up your home equity, and without access to that cash, you could be left struggling if your health declines or you need long-term care later in life. There's another problem here. As you age, the interest on the loan will compound. Over time, this can result in the amount you owe growing exponentially. The debt can become so large that your home's value won't cover it, leaving you in a financial bind. This brings us to another key point. If you haven't fully explored other options, you should be cautious about using equity release. Many people jump into equity release without considering other routes, like downsizing or seeking financial advice. Downsizing might not sound ideal, but it could give you a substantial sum of money without the long-term risks that equity release carries. For some, selling and buying a smaller home or renting might provide the funds needed without any debt attaching to the property. Speaking of alternatives, if you are financially stable and still have significant income or assets, using equity release could be a costly decision. If you have other assets to rely on or sufficient savings, tying up your home equity in this way could be an expensive mistake. The interest on an equity release loan compounds, so the longer you hold on to it, the more you'll owe, and it could outpace any investment returns you might have from your other assets. In the worst-case scenario, this could eat into your savings, leaving you with less financial flexibility in the future. Let's not forget about inflation either. Equity release loans are generally fixed rate, but inflation can erode your purchasing power. In a high inflation environment, if you don't have a robust financial plan to back up your decision, equity release can leave you struggling. Your home might be worth more in nominal terms in the future, but with inflation, your purchasing power could significantly diminish. Lastly, if you're facing severe financial strain and your primary goal is to pay off existing debt, equity release could seem like an easy fix, but it's a short-term solution with long-term consequences. Here's the reality. If your financial strain is related to credit card debt or personal loans, equity release won't address the root causes of those financial problems. Worse, it might even make things worse in the long term. It doesn't resolve poor financial habits, and the costs associated with equity release can add further stress to your financial situation. It's crucial that you take a step back before making this irreversible decision. Consult with a financial planner or a certified advisor who can guide you through the process. They'll help you weigh the pros and cons and ensure that you don't make a move that could harm your long-term financial health. Before we wrap up, here's a quick reminder. This content is for educational purposes only. Always consult a certified financial professional for personalized guidance, as everyone's situation is unique. So, when should you avoid equity release? If you plan to leave your home to your family, if you're facing long-term care needs, if you haven't explored other options, if you're financially stable with other assets, if you're not accounting for inflation, or if you're looking to solve short-term debt problems, then equity release is not the right choice for you. What's your experience with equity release? Have you thought about its risks before making a decision? Drop a comment below. I'd love to hear your thoughts. And if you found this helpful, don't forget to hit like and subscribe for more finance insights that could change your financial future. Looking for more ways to financial well-being? Watch the next video on screen. You won't want to miss it.